Good morning, ladies and gentlemen. My name is Greg Markowski from ForexLive.com. This is Morning Forex Technical Report, where I try to take a look at the markets from a technical perspective and make sense of them. In this market, recently, that might be a little bit hard to do, but let's give it a shot. We'll start by taking a look at the euro versus US dollar. If we look at the price ranges today or this week, the high and low price were both on Monday, as a matter of fact. And since that time, the price has seen market moves to the upside, to the downside, the upside, downside, upside, downside, upside, downside, and sideways and downside and upside. So lots of different arrows going in different directions there, indicative of a market that doesn't really know which way it wants to go. Now, that is okay. What that typically does is it moves from a non-trending market to a trending market. And you kind of hope for the break and the run and the shove and all those things that go along with it. So we'll be on alert for that. It's may not be this week, but we have something to look forward to perhaps next week. Some of the key levels that are in play, in addition to probably the highs and lows from this week. So this box right here is this swing area right down through here, where we have I've outlined this all week long with different highs and different lows that come in and form this area. And admittedly, on Monday, the market moved up below that level, and it also did on Wednesday. But in the last 2 trading days, we've seen the price come into this area and find support buyers. So there is some semblance of some support. Now, on the top side, there is this area up through here where we had a ceiling, and then we broke above it, and we had a floor, and then moved to our high price. And then I came back down into this area and found resistant sellers against it, and that continued in trading this week. The high for the week, as you can see, stalled against that area right there. So we need to get to and through the 110 level. It's a nice little natural round level as well. So getting above and through that level is another key level that would give more of a bullish bias for the pair. So this swing area right here, which by the way is also accompanied now by this trend line cutting up here, and then getting outside the red box would be more bearish. Moving above this swing area, the red box would take the price into the extreme, get it above the 110 level. Have traders looking toward the high price that we saw in trading last week near the 110.75 level, and we can go from there. But in the meantime, we are just mired in this range right here. 100 and 200 hour moving average, just the green and blue lines in this chart, or the blue and green lines, I should say. The 100 is a blue line, the green line is a 200 hour moving average. It could be thought of as a barometer, rudder that might be more bullish and more bearish. If it's above, it's more bullish. If it's below, it's more bearish. But as you can see in trading this week, you're probably like, Greg, you're a liar. It doesn't work that way. But there are times when it does, and a lot of times that it does. So pay attention to those lines at some point. They may actually help and work. So that's a look at the euro versus US dollars mess. Let's take a look. All right, let's take a look at the sterling versus US dollar next. And if we take a look at the range for this week for this currency pair, it's similar to what we saw in the euro versus US dollar. Lots of ups and downs. This day was in particular up and down, and then we're ending seeing some selling and trading here today, taking the price back below the 100 and 200 hour moving averages. It looks very similar to the euro dollar chart in that we have these two moving averages in between, with the extremes on the top side and the downside. And like the euro versus US dollar, we can look forward to potentially a move outside of the red box, or the box here that is probably confining the range from a swing area perspective. At least we have different highs right through here. This is very similar to what we saw in the euro versus US dollar, and we broke to the upside and came back down to that area. In this week's trading this week, we came down into that area, found support buyers, and moved to the upside. On the top side, more recently, we have this break to the upside, where we use the level as a support, and then fell below that level. And in trading on Wednesday, at least, the price moved up to that area and found sellers. And trading yesterday, the market moved closer to that area and found some sellers. So up here near the highs, it kind of makes sense. But it was also a support area through here before moving into the extreme up to 125.46 for the sterling versus US dollar. So pay attention. That's going to be a level on the top side. In between, we have the 100 and 200 hour moving averages. Of course, that's going to be a barometer for more bullish above, more bearish below. We are staying below it and trading here today. This swing area right here, kind of losing some of its luster as a swing area, but I would it's maybe time to clean it up and kind of take it out as a level the market is paying attention to. Be more interested in this area down to the 123.43 up to 123.60. Get below that level, that would open up the door for the downside. So watch the 100 and 200 hour moving average. Stay below is more bearish. Move above is more bullish. And get outside of the red box is how I would play the sterling versus US dollar. But in the meantime, it's lots of choppy action for that currency pair. The dollar versus yen. I'm going to put it on the 4-hour chart because the high price this week is somewhat important, and that was defined back here where we had different swing highs through here, and then that level became a support area through here. Then we broke below and became a resistance area here. And what did we do in trading this week? Came up to that swing area and found willing sellers against that level. So that was a key, probably a trading opportunity for you if you were attuned to that idea. And we saw the market rotate to the downside. And trading yesterday, we moved back below the 100-hour moving average and then found willing sellers against the 100-hour moving average right through here, which was a bearish signal, gave the sellers the opportunity to push further to the downside and trading here today. And we are trading above and below the 200-hour moving average in early New York trading during the London session as well. And also this swing area between 133.70 and 133.87. If the price can remain below the 200-hour moving average, and we're trading at new session lows here, watch this trend line and also the 38.2% retracement of the move up from this low to this high right here. Both of those levels come in near the 133.39 level, maybe just a little bit lower than that for the trend line. And then we'll look for the 100-day moving average. That's this blue line right here. Haven't moved above that level in trading last week and have not tested it in trading this week. So that would be the next target. So sellers are trying to take control here. Watch the 133.57 or 87 level on the top side. If we stay below that level and stay below the 200-hour moving average, bias remains to the downside with 133.39, 133.01 as the next key targets for that currency pair. So I hope it made some sense out of the markets in trading here today. It is Friday, so that could have influence as well. And we have some flash PMI data coming out. In Europe, the manufacturing sectors were lower. The service sectors were higher in the expectations today. Both the manufacturing and service are supposed to dip low a little bit lower, but remain near the levels from last month. My name is Greg Mikulowski. Good fortune with your trading. Bye now.